Good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. Good morning, Ankita.
Good morning to you, Harsh.
So this is the show where we talk to you about all that's happened in global markets through yesterday, as well as how the SGX is looking, which is at 25 points higher, marginal increase that we're seeing on the SGX at least as of now. And we'll take you through domestic news as well as we'll go stock specific stocks you should keep on your radar in trade today. That's how it'll play out. But let's first start off with how global markets are doing. Ankita, talk to us. A slight dip that we've seen, especially in the US.
That's correct, Harsh. We did see Dow and S&P 500 snap its winning streak yesterday after 2 days. And US markets fell yesterday while Dow and S&P 500 snapped, like I mentioned, a 2-day winning streak. Now, the tech-heavy Nasdaq dropped for the second day as higher yields put pressure on the index. It shed 0.4% in trade. The S&P 500 fell 0.1%, largely flat. The Dow Jones Industrial Average lost 37 points. Again, largely flat, but ended the day in the red. Bond yields rose yesterday. That's the key thing that happened yesterday, and because of that, there was a lot of pressure on the tech-heavy Nasdaq, with the 2-year US Treasury note climbing back above the 4% mark, putting pressure on stocks and the tech names in particular. Now, the yield on the 10-year Treasury note was trading at 3.5% after rising more than 1 basis point. However, bank stocks slipped following a contentious hearing at the Senate Banking Committee. Now, 3 top regulators each said that they favor more stringent rules for banks with more than $100 billion in assets. That was a roundup of the US markets. Now, let's look at the European markets. European stock markets closed mixed yesterday, with investors seemingly in a holding pattern after a serious bout of market volatility. The Pan-European STOXX 600 index closed flat, with many sectors having pared the earlier morning's strong gains. DAX was largely flat in the green, but 0.09% up. FTSE was up 0.1% and CSE was also up 0.1%. Largely flattish, but ended the day in the green. That was the mixed handover coming in from US and European markets. Harsh, tell us, how's the crude faring right now?
Well, yes, Ankita. So we're seeing gains, continue on crude. Last couple of days, we've seen good gains coming through from crude. And let's talk about that. One is, of course, the Kurdish supply of crude, which is around 450,000 barrels. We spoke about this yesterday as well. Comprises around 0.5% of total crude production. And that has been taken off the market due to its ongoing issues with Iraq. And now what's essentially happening is that supply being taken away, and on top of it, the pressure with regard to US not building stocks up either is what's aiding crude. Crude is in fact higher in trade. What we're also looking at is the dollar index has declined a wee bit, at least as of now. So we're seeing a bit of a decline on the dollar index. In fact, absolutely flat in early trade today, but it's still at the 102 mark, which also is aiding crude. So those couple of factors playing out in crude's benefit. It's risen. In fact, we're seeing Brent above the $79 a barrel mark, and we're seeing WTI just about below the $74 per barrel mark. That's where crude is at in early trade. But Ankita is going to talk to us about all the events to watch out for today.
That's right, Harsh. Let's quickly take you through all the events that you need to keep a track of as of today. Now, of course, we have the monthly and the weekly expiry today. Today's Wednesday, and we have a truncated week, of course, and tomorrow we have the markets are shut on the back of Ram Navami. And of course, we have the PNB board meeting to raise capital for FY24. We have the buyback record date for Symphony today. We also have the ex-dividend date for Hindustan Zinc. And Honda is likely to reveal the electric two-wheeler plan in India. And we have the 7th round of coal mine auctions that will be starting as of today. And finally, we have the board meeting by Vedanta to consider the 5th interim dividend. That's the roundup of the events that we need to keep a track of. But what is the global news? What is the global headline, Harsh, that made news overnight?
Well, yes, let's straight away jump into really what's happening on the global front. Let's talk about Alibaba first. Alibaba said that it will split into 6 business groups in what comes as one of the biggest overhauls of a leading Chinese tech firm. Company's chairman and CEO Daniel Zhang said that the restructuring would enable each separate business to pursue its own fundraising and public listing plans. Alibaba also said that the move would unlock shareholder value and foster market competitiveness.
And struggling EV maker Lucid announces plans to cut as much as 18% of its workforce, which roughly amounts to 1,800 employees. The moves come as a part of larger restructuring to reduce costs. Meanwhile, consulting giant Mckinsey is embarking on a rare round of job cuts this week. Plans to eliminate as many as 1,400 roles. This is according to news from Bloomberg.
Let's quickly move on. Global soda major Pepsi has unveiled its first significant rebrand in 15 years. The company is set to roll out the new look in North America this fall and across the globe next year. The new design evolves the brand to represent its qualities and will span across all physical and digital touchpoints.
And some good news. iPhone maker Apple launched a buy now, pay later service, which is known as Apple Pay Later. This will allow users to split purchases into 4 payments and spread it over 6 weeks with 0 interest and fees. Meanwhile, users can apply for loans between $50 and $1,000, which can be used for online and in-app purchases made on iPhone and iPad with merchants that accept Apple Pay.
Moving to all controversial crypto. The crypto exchange FTX founder Sam Bankman-Fried paid out tens of millions of dollars in bribes to Chinese government officials, alleged federal prosecutors in the United States. This is the 13th criminal charge tacked on Bankman. DOJ alleges Bankman has paid a sum of a whopping $40 million in bribes.
And North Korea unveiled new smaller nuclear warheads and vowed to produce more weapons-grade nuclear material to expand the country's arsenal. This after a US aircraft carrier arrived in South Korea for military drills. Experts have indicated that the release images could indicate progress in miniaturizing powerful warheads, despite their size, can be mounted on intercontinental ballistic capable of striking the US.
Well, on a positive front here, the world of social media has children hooked to their smartphone screens. But in the state of Utah in the United States, it's all set to change, and many states will then follow suit, of course. So what does this law mean? My colleague Vikram Oza explains. Take a look.
Early morning, late night, on holidays, even on school days. It's really hard to keep kids away from social media. From Instagram Reels, YouTube Shorts, TikTok, the world of social has really hooked these children onto their smartphone screens. But the state of Utah in the United States is now all set to change this. The Republican-ruled state has approved a series of measures that will limit children's usage of social media. But more importantly, children will now require consent of their parents before they sign up on social media platforms like TikTok and Instagram. Further, kids who are under the age of 18 would not be allowed to use social media between 10:30 in the evening to 6:30 in the morning. Parents could also set a daily time limit for accessing such social media platforms. And to make their social media experience safe and secure, these laws that have been devised, they prohibit direct messaging by anyone who the child has not followed or friended on a particular social media platform. Also, in a bid to hold social media companies accountable, these measures provide for penalizing social media platforms and websites as well for designing addictive features. The companies can be fined as much as $250,000 and up to $2,500 per child that is exposed to an addictive feature. It will also require companies to block underage accounts from search results and restrict them from collecting children's data. Further, children's accounts cannot be targeted for advertising. While Utah is the first US state to take these kind of measures. There are other states like Arkansas and Texas and Ohio, Louisiana, as well as New Jersey that are also looking at similar proposals. In fact, last year, California had enacted a law that prohibited tech companies from profiling children and using personal information in ways that harmed children mentally or even physically. The move comes amidst rising calls for regulating social media companies and putting checks and balances on how they exploit user attention and user data. The past couple of years have also seen this alarming uptake in smartphone usage by children. A 2022 report, in fact, has revealed that children between the age of 8 and 12 spend an average of 5 hours and 33 minutes on their phones. The screen time shoots up to 8 hours and 39 minutes for the children who are aged between 13 and 18. So now the big question is, will the laws in Utah kickstart regulatory and social pushback against social media companies? For that, we'll have to keep watching and indeed see how these regulations actually impact a change.
Right, with that, we'll slip into a very short break. More on the other side. Stay tuned. Welcome back. You're watching Market Cafe on ET Now. Let me quickly move straight domestic. Sebi board may approve ASBA-like system for secondary markets and end the practice of directors occupying permanent board seats at listed companies. ET Now has learned from sources that in its meeting today, the Sebi board may make many far-reaching changes for market participants. Ankur Mishra has more details.
Yes, all important Sebi board is going to meet, and what we understand through sources is that Sebi board may consider ASBA-like system for secondary market. The system is already in place for primary market, and the idea is that as it has been successful in the primary market, the implementation should happen in secondary market too. Remember, in the ASBA system, the amount only get blocked in the system but not deducted from the user's account. Apart from that, Sebi may also consider ending the practice of directors occupying permanent board seat in the listed companies. The market regulator may also allow private equity funds to operate as sponsors of mutual funds. Apart from that, as far as the reforms are concerned, we understand that the board may discuss revamping of disclosure norms. Currently, as far as the timeline of disclosures are concerned, it is within the 24 hours of the occurrence of the event. Now that may be reduced to 12 hours as it was suggested in the discussion paper too. Now ESG norms is also something which the Sebi board may consider. There is a need of standardization of ESG norms, and we may see that in the board meeting that consideration may happen.
And well, shifting focus to an ET Now exclusive. Sources tell ET Now that the Oil Ministry has presented the Kirit Parikh recommendations to the PMO on the gas pricing formula. My colleague Prakash had filed this report earlier. Listen in to what he had to say.
The sources are informing that the Oil Ministry has given presentation to the Prime Minister's office on Kirit Parikh committee report on natural gas pricing. Sources have informed that the Oil Ministry has already sent cabinet note on Kirit Parikh committee recommendations. As you are aware, that any change in current pricing regime has to be approved by the cabinet. We have also been informed by our sources that the Oil Ministry wants that the Kirit Parikh committee recommendation should be implemented from 1st April 2023 in order to provide relief to the consumer. Old pricing regime is in effect till 31st March 2023, and any change in current pricing regime has to be approved by the cabinet. As you are aware, that as per the Kirit Parikh committee recommendations, domestically produced natural gas prices will have a ceiling of $6.5 per MMBTU and floor price at $4 per MMBTU, which means the domestically produced natural gas prices are going to be reduced by approx $2 per MMBTU, which will provide much needed relief to the consumer like city gas distribution companies, LPG and CNG, PNG users.
Right. Thanks for that, Prakash, but stay in there. Back in September last year, the government introduced the PLI scheme to reduce India's dependence on China and other foreign countries when it comes to manufacturing solar PV modules. As the tranche 2 of PLI scheme, the government will invest around 93,000 crore rupees and allocate a whopping 39,600 megawatts of capacity towards this. Prakash reported this earlier.
See, the Ministry of Power has announced the list of successful bidder under the PLI scheme for manufacturing of solar PV models. As you are aware, that the Ministry of Power has announced second phase of the PLI scheme for manufacturing of solar PV models, and under this scheme, Ministry of Power has selected 11 companies which have been selected to get incentives from the government. Government will provide, approx 14,000 crore as an incentives to the companies based on their manufacturing capacity. The selected companies are Reliance, which has been selected for manufacturing of 6,000 megawatt capacity, First Solar for 3,400 megawatt capacity of solar PV models, JSW for 1,000 megawatt capacity, Tata Power Solar for 4,000 megawatt capacity among the list of companies. As per the Power Ministry, it is estimated that approx 93,000 crore investment will come by this scheme going forward. Apart from that, government is also hoping to add approx 48,000 megawatt manufacturing capacity of solar PV models in next 3 years.
And Tata Power is seeing no shortfall of energy supply ahead of this summer season. That's the word coming in from the President of Transmission and Distribution, Sanjay Banga. Speaking to ET Now, he shares how rationalization in the power tariff will benefit consumers as well as the discoms. Listen in to what he had to say.
So in Mumbai, we never have load shedding. And Mumbai is a city which has most reliable supply in India. We are expecting around 4,000 megawatt of peak demand in Mumbai. For Tata Power Mumbai, we are expecting around 1,000 megawatt. We have a power arrangement of around 1,400 megawatts, so we don't expect any shortage of power. Mumbai is lucky in a way that the entire network is underground. Entire network has a redundancy. On the top of that, you have latest technologies deployed, so if there is a fault from one side, supply is restored from other side. That is why you don't feel any outage in Mumbai now. If you see there is no outage, and if you see that we have surplus power even in summer, we don't see any issue in summer for Mumbaikars. In addition to that, the growth in demand, if you see, Mumbai per capita consumption is around 2,000 plus, whereas India per capita consumption is around 1,200. So the demand growth in Mumbai will be relatively less. So whereas the India can have a demand growth of around 10% in terms of consumption, Mumbai is not going to have more than even 5%. That is what our projections is, and we use load forecasting tools to decide what would be forecasted demand. And as per our estimate, it's not going to be more than 5-6% in Mumbai.
Welcome back. You're watching Market Cafe on ET Now. I'm going to quickly take you through what Asian markets are up to in early trade. We're looking at gains across the US futures. So that's a big positive coming through on the back of a slightly muted performance in trade yesterday. But let's have a look at Asia. The Nikkei is up around 0.5% as we speak. We're seeing gains on the ASX 200 as well, but largely flat is where we're looking at it. Up just 0.1%. We're looking at gains on both the Hang Seng as well as the Shanghai. The Kospi though is absolutely flat. Negative bias is what it's trading at. Hang Seng is up around 2.25%. That's a positive. And we're looking at a very, very marginal or a flattish gain on the Shanghai as well. But it's just slipped into the minus. So it's down around 0.1%. A slight negative bias there. We're looking at an absolutely flat SGX, which is steadily giving up points through the course of this show. So we've seen the SGX give up all of that. It's at 17,000 now. Can only hope for a start at 17,000, at 9:15 as and when we do. So At the moment, we're expecting a very muted start on the back of muted global cues. Right, let's quickly move on. Lawrence Blanco, who is the technical analyst at CLSA, believes that pharmaceuticals continue to be in a downtrend. He suggests that looking at IT stocks could be a positive, but reducing exposure to autos is what he recommends. Let's listen in to all of his views on the IT and the auto pack.
The pharmaceutical side, unfortunately, that remains in a downtrend. Yes, we have had a rebound over the past few sessions, but the broader trend is down in both absolute and relative terms. And, one of the sectors we've been highlighting as take profit or sell has been the auto side. We had great outperformance last year. That's rolled over, broken down. So we'd continue to recommend reducing exposure to that space. And another sector where you're at least getting some relative outperformance currently is from the IT side. That's not because you've seen a breakout in absolute terms, but it's the trading range that you've seen there at least generate some relative outperformance. Mahindra again, had been the big breakout that you saw early 2022. It met its upside target. And if you look at the chart over the past 2 quarters, you've seen a triple top pattern and a breakdown from that with a recent break below the 200 days. So we do think there's further downside risk for Mahindra. Mahindra would be a seller on that chart setup. Yes, Tata Motors is holding in the trading range, so you can potentially get some relative outperformance from that. TVSL is another stock that does show another potential topping pattern and would reduce exposure there. Well, you have to look at the large cap Tata Consulting, which is holding in the trading range. If you look further down the market cap side, you have seen weakness in Wipro. So it's really about staying in the large cap Tata Consulting that's holding its range. That's where the relative outperformance is coming from. We've been in a trading range since the third quarter of 2021. I mean, the interesting thing, as we've highlighted recently, it's bottom end of its range, downside momentum slowing. So we do think that does hold support and rebounds off the support level around the 2100 area to remain range bound. So accumulating down here, I think it's a good risk reward entry point.
And well, it's that time of the show where we get you all the stock specific news. And for that, we have Ashesha in the studio. Good morning to you, Ashesha. Tell our viewers, what are the stocks that they need to watch out for in today's trading session? What has caught your eye?
Hi, good morning. So GR Infra Projects will be the first one in focus, and that is on the back of an order win. The company has informed the exchanges that they've received letter of acceptance from East Coast Railway. Now this project is worth about 587 odd crores on the back of this LOA which the company has received. Keep an eye out on GR Infra Projects in today's trading session. Apart from that, NBCC will also be in focus, and this is also on the back of an order win. The company has been awarded work order to the tune of 146 crores for construction of a hostel building and various works for SIDBI buildings. On account of this order win, NBCC will also be in focus today. Also keep an eye out on PNB Housing Finance, and that is on the back of a rights issue that the board of directors have approved. Rights entitlement ratio will stand at 29:54. Rights issue price has been fixed at 275 rupees per share, and the record date for the same has been fixed as the 5th of April. RHI Magnesita will also be in focus, and that is because board of directors will be considering fundraising to the tune of 200 crores on the 1st of April. Lastly, Tube Investments, that is because multiple private equity funds have invested about 266 crore rupees, whilst SBI has invested 133 crore rupees in T1 Clean Mobility Private Limited, which is a subsidiary of the companies. On account of these investments being made by SBI and by multiple private equity funds, keep an eye out on Tube Investments as well.
Right, thanks so much for that, Ashesha. But Vedanta, back in the spotlight, declares its 5th interim dividend of 20 rupees per share. And that's for the current financial year, FY23. The dividend will amount to over 7,000 crore rupees. Ashesha, talk to us about what this means for both shareholders as well as the company.
Absolutely. It has been in focus for multiple reasons over the last couple of trading sessions. Today, of course, on the back of this dividend that the company has declared. It has declared 5th interim dividend to the tune of 20.5 rupees per share, and this will entail an outflow of about 7,621 crore rupees for the company. At 20.5 rupees, it implies a dividend yield of about 7.5% at the current market price. Now, for the entire year, the company has now declared a total dividend of 101 rupees per share, which is much more than the total dividend that the company had declared in FY22, which stood at 45 rupees per share. Now, major implication is for Vedanta Resources, which is the parent company of Vedanta Limited. Remember, it holds about 69.7% stake in the company, and this dividend which Vedanta Resources will receive will help Vedanta Resources repay its debt obligation, which has been a concern over the last couple of months. Remember, Vedanta Resources has already gone ahead and reduced its liabilities by about $2 billion in FY23 itself, and the company has said that it has outstandings of about $3 billion in FY24. Apart from this, CFO of the company has also resigned. Mr. Ajay Goel has resigned from the post of acting CFO and KMP of the company. This resignation will be effective from the close of business hours on the 9th of April, and the company has said that they will announce the details of the successor in the due course. So, of course, the stock will be in news because they've declared a dividend, and the total dividend for the year now stands at 101.5 rupees per share, and the CFO of the company, the acting CFO of the company, has also resigned.
Right, definitely in focus there, Vedanta, but let's slip into a very short break. We will stay stock specific and more on the other side. Right, welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through. There's going to be an NSE reject that's going to be happening and effective today. Let's quickly take you through the top movers there. You have the top flows in terms of dollars million. That's not percentage on your screen, it's dollars million. It's $35 million, which Page Industries will see an inflow of. These are top net inflows that you are seeing on your screen. Canara Bank will have $31 million of inflows. SBI 28 million, ABB 27, and Axis Bank 23. That's the top 5. Also, the more relevant piece of this is the flows versus the average daily volume. Now, within these 5 stocks, and I'll request the producer to flash those 5 stocks again, Page Industries, in terms of flows to average daily volume, will be nearly 4 times. So that's the first. And in terms of the other meaningful one, Canara Bank will be 1.1 times and ABB India will be 2 times average daily volume in terms of flows. So that's the important metric to look at. The other piece is in terms of outflows. Again, net outflows across NSE indices. What we're looking at is Reliance will see an outflow of $42 million, Infosys 39 million, Emphasis 27, Bandhan Bank 25, and M&M 24. Again, within this pack, you'll see Emphasis 2 times flows versus average daily volume. So keep your eyes out on that one. And Bandhan Bank 1.4 times. Those are the 2 meaningful ones. M&M also 0.6 times. That's quite large as well. So keep your eye out on all of those stocks because they will or likely buzz today.
And speaking of stocks, we also have Ashesha back in the studio to tell us about what the brokerage notes are saying of all the stocks that we need to keep an eye out on. So what are the brokerage notes saying, Ashesha?
Yes, so Bajaj Auto will be the first one in focus because JP Morgan has come out with a note. They are maintaining their overweight stance on the stock with a target price of 4,400 rupees per share. They say that they are seeing favorable risk reward in Bajaj Auto and catalysts are now lining up. Shares should potentially re-rate in 2022 and the company is now becoming more aggressive with respect to its EV launches. Improving margins is what we are seeing due to better overall mix, and the current valuations JP Morgan believes are pretty attractive at about 13.4 times FY25 PE, and hence for now they are maintaining their overweight rating on the stock with a target price of 4,400 rupees per share. Apart from this, Arvind Life Spaces will also be in focus, and that is because Antique has initiated coverage on the stock with a buy rating and a target price of 350 rupees per share. They say company is an emerging real estate developer. They recently forayed into Pune and the company also has plans of entering into MMR region. They expect the company to continue its growth projection. On the back of this, they've initiated coverage with a buy rating and a target price of 350 rupees per share. So also keep an eye out on Arvind Life Spaces. Apart from this, oil marketing companies will also be in focus. Remember, Brent crude fell to about $75 per barrel and now it has regained some momentum. So on the back of this, we have note coming in from JP Morgan where they expect marketing business to remain under pressure for many of these oil marketing companies. They turn cautious on the entire oil marketing segment. They are preferring IOCL as they believe marketing portfolio is relatively most balanced as compared to its other peers. So on HPCL, they are maintaining their underweight stance on the stock with a target price of 207 rupees per share. On BPCL, they are maintaining their neutral rating with a target price of 423 rupees per share. And IOCL, they have overweight rating with a target price of 163 rupees per share. So on the back of this note that has come in from on oil marketing companies from JP Morgan, keep an eye out on these counters as well.
Right, thanks so much, Ashesha. Yes, we will. Let's quickly move on though. India's largest cigarette manufacturer, and it also manufactures cookies. ITC is in the spotlight after Morgan Stanley channel check suggests that the company has hiked its cigarette prices for their KSFT or king size filter tip segment. Sharad is here with all of those details. Sharad.
Well, yes, in focus we are having ITC, and the stock itself has kind of re-rated. The stock is up almost 50% over the last 1 year, but MS channel checks are suggesting that there would be a price hike of almost 50 paise per stick for their gold flake king size segment. Now, do remember that actually comes down to almost a 3% increase when it comes to that packet as well. Now, apart from this, also there are certain price interventions coming in their Bristol brand, and there are also almost a 50 paise price increase stick coming in. Now, just remember that on an overall portfolio level itself, if you look at it, it's currently coming in at a 1% price hike. But the impact of this background is, of course, the important thing is the tax hike which was there in the budget. Now, to offset this, the price hikes have actually started taking place, and over the last 2 years itself, there was no action. And over here also, overall, the channel checks are suggesting that the price hikes are taking place across the portfolio level and in various markets. And in the times to come, they're expecting the similar price increase to come in almost all the markets in India. Now, overall, if that happens, then we could expect almost, you could say, almost a 3% increase in the portfolio level as well. And overall, if you look at the demand environment as well, Morgan Stanley has stated that the demand environment for the cigarettes is remaining stable. And apart from this, also in an exclusive interview to Economic Times, the management had stated that there would be a turnaround in FY24 when it comes to their FMCG business.
Right, thanks so much for that, Sharad. Let's quickly look at Bandhan Bank. The stock was in focus yesterday as well. In fact, under a lot of pressure yesterday, 5% plus lower, and it's down 19% in the last 1 month. Now, this is possibly due to its exclusion in the MSCI, which may undergo a rejig. And that exclusion may happen if the stock price falls below 170 for 1 week by the 17th of April. The expected outflow then, if that situation were to happen, the expected outflow will be a whopping $80 million, which is equivalent to 7 days volume for Bandhan Bank. So definitely the stock will come under further pressure if that were to happen. So keep your eye out on that one and mark it out. It was down over 5% in trade yesterday at 187.5 was the closing price. Mind you, 170 and lower, and MSCI will shuffle that out.
All right, and Tata Power also held its management meet, and B&K Security says that the company has string bargaining power to recover its dues. And the company has closed down the Mundra unit until the dues are recovered. The company has sought intervention of the ministry in this matter. State distribution companies owe 1,800 crore rupees to Tata Power, with the highest dues from Gujarat, followed by Maharashtra, Punjab and Haryana.
Right, we'll switch back to ITC. ITC Limited Chairman and Managing Director Sanjeev Puri said the company will accelerate investments which had slowed down during the pandemic, with a corpus of around 3,000 crore rupees annually for the next few years. This will be primarily used for building manufacturing capacities and accelerating growth. He also expects the FMCG industry to bounce back by volume sales growth from the next fiscal year, led by rural demand. With early signs of recovery already visible, Sanjeev Puri said that the revival will be accelerated with inflation cooling down and product prices correcting. The chief of one of the country's largest conglomerates said ITC's plans to create an alternate structure for the hotels business will be undertaken in the next couple of quarters.
All right, with that, we're completely out of time on this one. Thank you so much for tuning in. Don't go anywhere. The market will take the action forward.